Thank you, everyone who's here listening. Before we start, full disclaimer. We are not professionals nor certified stockbrokers. We do sell, buy, and trade stocks, but at our own discretion. The content that we talk about is based on our own opinion, not fact, and the content is for entertainment purposes only. Remember, what you invest is at your own risk. If you know nothing about stock investing, we highly suggest you seek professional help. Due to the content of the show, this is for mature audience only. Welcome to the Hustle, the Struggle Investment Podcast, where two regular guys not from Wall Street come together and simply talk stocks and investments. We're here to give you the raw and uncut stories of an everyday trader. Tune in and zone out. Let's talk money. Hello, everyone. Thank you all for tuning in. This is the Hustle, the Struggle Investment Podcast. It's a new podcast. Two friends come together. We're here to talk about stock investing, but what makes this podcast different is we don't talk about strategies. It's not a how-to, but we just talk about the experiences of being in the stock market, just being a trader, saying some of our triumphs, our pitfalls, talk about various topics, just ideas on what to trade, how the market is moving, and so forth. So this is the first episode of many great other episodes in the future, hopefully. But yeah, what we want to do with this first episode is just introduce ourselves to the audience so they know who we are. As the disclaimer had said in the very beginning, we're not professional, we're not certified, we're just everyday people. But the reason why we put this podcast together is we wanted to bring out a new audience. We want to take people that's financially ignorant and influence everyone like, hey, you should really get into the market. You don't have to be business savvy. You don't have to be part of Wall Street. None of that stuff. Just do your education, do the right research, get as much information as possible, know what risk that you're taking, but virtually anyone can invest. So that's why we're here. Mm-hmm. So with all that said, this is your host, Herbert, and a friend of the host, Dave.
Hey everyone. My name is Dave.
Dave, welcome. And Dave, if you would like to introduce anything and say your piece.
Yeah. Hey, welcome. And thanks for welcoming to the podcast. I'm sure we'll have a lot to talk about. And I'm really, you're right. This whole journey about investing and starting investing has been a very interesting ride. And when you do meet people, they often have interesting stories. So I'm, can't wait to hear everyone's story.
No, for sure. And I'm pretty sure that we have a lot to kind of give the audience. So that'd be a good lead to say our first topic is our first trade experiences. So Dave, I can start off. I'll just kind of introduce myself and then I'll mention my first trade experiences. So as I said before, this is your host, Herbert. I reside here in San Francisco. I'm originally from Chicago. I've been investing for probably 7 years, almost a decade. My best year actually was last year during COVID when it was at its lowest. Fortunately, I got in at some of the aggressive volatility, some of the bullish upswings that we saw so often in some of these tech stocks. Yeah. So at that point, I become a lot more optimistic, and especially with the performance of crypto. But yeah, my first trade experience. So I got into trading maybe at age 27, 28. I don't remember the exact age or even year. I just know it was roughly around that time. But I can say that the first stock that I bought was PayPal. I bought it when it's $45 a share. And what's crazy is PayPal is $300 a share. And I can tell you, like any rookie investor, I sold way too soon. But I started off buying one stock. And before I even got into the stock market, I did a shit ton of research. I did a lot of research. So it's not like I was like, okay, I woke up one morning. It's like, okay, I want to like invest. I want to make more money. So let me just open up an account. But it was a lot of things bringing up to that point that I learned, like what account to open. The first investment account that I did open was an IRA, and that was actually by mistake.
Oh, okay. Yeah, that's interesting.
Yeah, because I was doing my research, and I was so caught up in like the risk part. I was so afraid of the risk that naively I figured, okay, you want to open up like a proper account for like the safest account is how I would have described it. So I think I did a Google search where I'm like, what's the safest account to open? Oh. And I think an IRA popped up. So IRA, what that stands for is an investment retirement account. But the thing about the IRA is exactly what it is. You can invest, but it's for retirement. So whatever money that you make, you won't be able to see that money until you're at the lawful age of retirement, which I think maybe like 55, 60 or 65.
65.
65, okay. But I opened that. That was my first investment account. And so just thinking that that was the safest account, which doesn't make a difference. You know, risk is risk. But again, I learned that the hard way. But opened up an IRA. I think I might have deposited no more than $1,000. That was the amount that I started at that time.
Yeah.
And the first stock was PayPal. Because when I did research, it was this thing about like, oh yeah, the safest way to invest is blue chip. Blue chip. And what blue chip investment is when you purposely look for blue chip stocks, there are companies that you know relatively going to do well. You can just come in with the common sense approach in buying the stock, and you know that it's in for the long haul. Is basically those very big corporations and establishments that has a great household presence, commercial presence like Amazon, Walmart, and so forth. That what you would consider blue chip. So just doing research, PayPal. And I think I was using PayPal at the moment because before I was in stock investing, I did freelance. I had a website, herbertvictoria.com. It's my own e-commerce where I sell products and clothing. And with that e-commerce, all transactions are made through PayPal. And I don't know. That probably was my only motivation why I bought PayPal.
That makes sense. You use it.
Yeah. I didn't know anything about researching or forecasts at all. So, so I got a stock, one share of PayPal. One fucking share. And then
okay. Cool.
Yeah, make a long story short, that one share after a couple of months, probably made me like $50. And then I just added in increments. And then that one share turned to 10 shares, eventually 30 shares to 50 shares. And I think the most I've ever had from PayPal was 100 shares. And that probably was 2 years later.
Okay.
Then,
but that's like, it's 2 years later. But since it was your first trade,
mm-hmm.
How did it go? Were you, as soon as you bought PayPal, that one share, what was going through your mind? Were you thinking you just sit back and wait and you're going to be making money, or this is something you needed to watch every day? Were you worried?
Well, a little bit of everything. I can tell you I was a little bit excited, a tad bit anxious, but I think for the most part, I really didn't know what I was doing. I really was kind of just taking a swing at it. So I can say when I built the courage to buying that first share, I was like relieved. Mm-hmm. But then, of course, I'm in my mind, I'm saying like, okay, you doing this as a trial, but expect to lose money. Just expect it, if it happens, it happens.
That was your expectation?
Yeah.
That you would lose money?
Yeah, just so I won't feel so bad about doing this.
Okay.
Yeah, I mean, because you hear the horror stories so often. People come in investing and they don't really know what they're doing and they lose like hundreds and thousands of dollars.
Yeah.
I didn't want to be that person. That's why I started off with just one stock. But yeah, I think I just came in at the right time. It was a lot of bullish momentum with PayPal when I bought it at $45. So I never saw really any losses. There was a period when I said maybe 2 or 3 years later down the line and I bought more. Yeah. I think it went up to $70, and at that point I had roughly about 80 to 100 shares, and then
wow,
yeah, that couple of $10 that I made was turning to 100, and now I'm like making a few $100 because again I bought the shares gradually, so it's not like I had one share then I instantly bought 100 shares and it jumped up to 79. So it was a lot of money that I've missed out on because I didn't buy enough, but at that point that I had 100, and I think it went from 79 and pumped up to 90. Mm-hmm. And then when it pumped up to 90, that's when I really saw this obscured gain. And then that's when I saw like my first like $1,000 made. I was super freaking excited.
How old were you?
Oh man, at this point I might have been 30.
Okay.
Yeah, 30, 31.
Yeah, still that's a fair amount of money just to make, especially when you're thinking of like, oh, how many hours of work is that?
Yeah.
How many overtimes?
Yeah. But
interesting.
Yeah, but I did that. But at that $90 point, it was a little bit of volatility, a little bit of pushback in the company. I think they were going through some things. It might have been a lawsuit, but yeah, from that 90, it dropped back down to 70, and then that's that was the experience moment of actually losing money and
Oh,
how it feels to lose a lot of
yeah.
money.
The
And
highs and then the lows,
exactly.
or relative, I guess. So at that point, okay, so you kind of you made some money, it went back down. You didn't necessarily lose money, but you lost some profit there.
Exactly.
Yeah.
Yeah. I wasn't negative. Good point. Yeah, I
So
wasn't negative, but I lost profit for sure.
what was going through your mind then? Do you remember?
Well, again, I came in with so much hesitation in the beginning, and that was something that I expected. Like in my just coming in investing, I'm coming in to lose money. So at that point, I'm like, okay, this is just part of it. And I did call. I made a lot of calls to like just stock advisors and stuff, and
Oh,
my first brokerage firm was TD Ameritrade. That was my first account. So I was constantly calling TD Ameritrade representatives and just asking.
oh, really?
Yeah,
Talking
just
to people. Wow.
yeah, just
Cool.
asking a ton of questions and whatever they could answer legally.
Yeah.
Was very very helpful. And I remember talking to one of the reps and asking about like, yeah, I'm losing money in PayPal. What do I do? And they're like, well, you have to know strategies and so forth. But you're relatively young. You have to think long term. You need to ride it out.
Yeah.
And that was good advice because it made me understand that, okay, like you're not really in this, to make quick cash, that it's, that it's all progressive. And that's one thing that people really need to pay attention to if you get into the stock market is volatility. Like that's just inevitable. It's all part of it. So if you get into a company and let's just say that it's fairly established or in other words, a blue chip, if you buy it at a fair price and it goes up, definitely expect it to go down. And if it goes down, don't freak out. You just have to do your research and stay up to date to what the company is doing. And the reason why that's important, because obviously companies get sued, just all type of stuff. They get
stuff
sued, under
happens.
fire. Yeah.
Even the best company can disappear,
Yeah.
I mean, where's Rockefeller now?
Yeah.
But yeah, hey, well, what I found amazing is that, when you started, you knew all this,
Yeah.
and yeah, did it help knowing this?
No, of course.
Yeah,
Definitely
it
do the
seems like
research.
it.
Yeah. Speaking of TD Ameritrade, to their favor, like they give a lot of resources up into trading, real news, like on the market. They even have a program called Think and Swim. And by the way, I'm not sponsored by TD Ameritrade. I'm saying this just out of being a happy customer.
They just send us envelopes full of money. That's all.
I wish, right?
Yeah.
But no, I was a customer, and for sure, they're a large component to what really helped prepare me to investing.
Interesting.
But they have this free virtually trading program called Think and Swim, where you can use virtual money, but you still trade into real time market just with fake money, just to see how it goes.
Yeah.
And then you can obviously convert that into real money and work your account.
Yeah.
But yeah, just to sum it up, that was my first trade experience. It was with PayPal. But I did sell it all. I no longer have it, and I kind of regret it. But again, I was new to it, so as a rookie trader, you sell too soon. I sold all my stocks when it was 129, but now it's roughly estimated $300. But yeah,
Still pretty good. You almost made double.
Yeah, but
which is good, rate of return. It's a good return.
Yeah.
Maybe even after a couple of years.
But imagine once I hit that 100 share mark, and I got that at 70, and it swung up to 90. So you're right. It was a really, really good return ending at 129. But then imagine the return at 300 if I still had 100 shares.
Oh, yeah. I mean, this
FOMO.
Shoulda, woulda, coulda. Yeah, FOMO. Yeah, just it's a curse of us all.
Yep. So how about you, Dave? So you have to say your first trade experience.
Let's see. My first trade experience was back in university, which for me was around 2000s. And
so it was before me then, yeah?
Yeah, a little bit before you, I think. So I know what stock it was. It was a diamond mine. So there's a lot of news on TV, and I'm not interested in stock markets at this point. Not really, just going to college or university, partying and all that kind of stuff. Kind of anti-capitalism-ish, but not hardcore,
Yeah.
no one likes to party with someone who's totally anti-capitalism.
Yeah. But what was the motive of the diamond mining?
Yeah.
Why was that the start?
So I guess I heard some people, I can't remember who, were stock trading, just, whatever. And then I saw in the news, and I've always felt that the media has a strong role in people's lives. So I'm like, okay, it's on the news, they're saying to buy the stock. And I looked at it. I'm like, okay, I want to try to buy some stocks. It's always been kind of a...
You took a very risky approach.
I guess, but it's kind of like a cheap gamble, like maybe I was somewhat like narcissistic or something, like, oh, okay, I can spend $30 here or whatever it was. It was actually $300. I think I bought about 10 shares. It was roughly about $30 a share. And I was thinking, oh, I could spend $300 at a casino, which is kind of funny because I never go to casinos.
Yeah.
Or I could spend it on the stock market. And $300
from an infomercial.
Well, it was a news, like, those 60-minute kind of things or whatever, where they'll fly someone out there and talk about it. But like, I just thought, okay, I'll give it a try. Just, throw it away. I also had the kind of feeling that I would simply lose all that money, which is kind of funny because I think a lot of people, people always say they're ready to lose money, but no one's ever prepared to lose money. But that is also the most common expectation I hear people who generally start. And I think that is a healthy attitude. Yeah.
I mean, the same as me. I just said the same. Yeah.
So I invested $300 and the stock went up. I think it went up to like $40, $50, my very first stock purchase, based on this principle. In fact, actually, I when I bought the stock, because I saw it on the news, I thought it was kind of like, oh, this is hype. Yeah, hype. So I'm like, oh, I'm gonna buy it because it's hype. And
I always feel like that when I see stocks as advertised, though. That's why I say, like, you took a very big risky approach from like being influenced by seeing ads.
And that's kind of why I think today I'm always like, you see these ads, oh, buy this now, buy that now. I'm like,
it's notorious on YouTube, dude. I hate it.
Man, it's like every other ad, in the past. This cereal, buy this, buy Coke, buy Pepsi, and whatever. It's like, man,
it's like, all you Tesla's buyers, there's this EV stock, just wait. It's like, come on, dude.
Oh man, I don't want to buy, some knockoff Pepsi or Coke,
Yeah.
So it was interesting because, of course, the stock went up. In the end, I lost everything. So what validated?
Okay.
So I put $300 in. What validated the whole experience for me was that I felt that because of the hype, I recognized it, and that was a prime motivator for the stock to go up. And this was diamonds, so something, there's kind of somewhat of a controversy around the true value of diamonds in itself, let alone diamond stocks,
Yeah. And was it clean diamonds?
It was. It was clean. It wasn't war diamonds, and maybe that had something to go going for it as well. But what I didn't clue in is that hype comes to an end, and I thought that the hype would last a little bit longer,
But then so you said something interesting. The whole hype component. Now, knowing what I know now in investing, right? I mean, one thing you probably just didn't consider since it was your first time investing is the industry.
Yeah.
When you talk about diamond, that doesn't sound anything that's like consistently long term.
Yeah.
That's more of like a trending type of investment.
Flash
it's like the value of gold, silver. Like every so often, if there's a scarcity in actually finite cash, then obviously like other minerals and other forms of trading, that goes up. But that's a very trending like component. So it probably was just relative to that time to when it went up and you made money. But because you probably just didn't know that industry at the time, you didn't know that was a good time to trade and keep your profits.
Yeah. Yeah, there's a lot of things I didn't really understand, You think of diamonds, but in the grand scheme of things, not a lot of people do think about diamonds,
It's true.
Someone's going to go make an investment, let alone a purchase, everyday purchase. Diamonds are not really at the top of anyone's list. And That's also one thing I realized is that when you invest in something, it's got to be something kind of for real,
Yeah.
to a lot of people,
No, for sure.
So it is not I don't know, it's not the Ferrari way, the premium way. It's the everyday common, Toyota, Corolla way.
Yeah. Well, hell, I mean, I already said it. When I came in trying to find the safest way. Like I literally Google searched what's the
Yeah,
safest
your
investment account.
your investment made a lot of sense. I mean, at that time, electronic payments, and now we consider it a norm.
Yeah.
So,
But even though that wasn't my approach,
Yeah.
it was just like hell. I was using PayPal. So I was just thinking, what could I invest in? And I'm literally on my website, and I'm like just doing my thing, and I might have just sold a dress or an item from the site, and I'm looking at this PayPal invoice, and I'm like, let me see what the value of PayPal is, and then sure I saw it. I'm like, okay, I can afford that. I'll buy it.
yeah,
Yeah, it was as simple as that.
yeah.
But yeah, you're right. I mean, knowing what I know now, hell, if I could have foreseen this, you're absolutely right. Electronic money, like that's the future. It's valued at $300 a share now. Like I said again, FOMO.
Yeah. FOMO, but like I always bring in this concept of early adopters.
Yeah.
We grew up in a time when the internet, in the 90s, if you grew up in the 90s, that's the boom of the internet. That was still a mystery. No one questions it now.
So true.
But in the 90s, people were like, okay, this is the internet. I guess they weren't questioning whether it's going to stay or not. They're just questioning how big it could get.
Right.
How influential in our everyday lives.
Yeah.
So I think I think what you did was an early adopter, and that's a very special skill. And you could say that was people who bought Bitcoin at like 10 cents or $1.
Yeah, and that's definitely a skill that can be taught. Like that's a very intuitive skill.
Wow.
It's really just you have to, I don't know, like subconsciously optimistic, like very deep rooted into your decision making.
Yeah. And like I think these people are probably like, fortune tellers or psychics or Nostradamus, they're getting high in their libraries or den and trying to predict the future. There's actually organizations that I think they're called the Good Judgment Project that is about trying to find trends, that kind of thing.
Yeah. I remember like when I was really, really into my fashion stuff, this is something separate from stocks, but like Las Vegas, they do these magic shows, which is basically huge trade shows for like fashion, fabric, textile distribution. So you just get all these companies, and like if you're a designer, you can come there and like you can buy fabric or just trends and stuff. I mean, not trends, trims, just assortments to start a clothing brand exclusively within this market. But they would have this material like forecasting books, trend books, and they would be thousands and thousands of dollars, and all it was just future predictive forecasts.
Oh, wow.
Yeah, and I'm pretty sure it's from like prominent people, but like you pay $10,000 to buy this book on like fashion trends, 4 or 5 years from now. So
Really?
it's already been predicted and justified. You just make the investment.
And there's a group of people that do that. Like there's a whole organization that
I guess so.
Interesting.
I mean, I never bought the book.
No idea.
I would never buy a book for $10,000.
Is it a popular, like, was it a well-known book?
No. I mean, when I was at the event, like like certain booths or whatnot, you would just see the material on the table, and it would be priced at.
I see.
So I mean, you can see enough where you see the title and what it is, but at that price, I can't afford it, so I don't know what the book said inside.
Everyone wants to know the future, right?
Yeah.
And everyone wants to bet against the future, like
or
something like that.
Yeah, it's a trip.
Anyways, get back to the original question. I guess what really motivated me to stay into stocks, even despite my loss, which came a little bit later, was in university, my roommate, who is also a good friend of mine, in his second year, I remember, we lived in the same town, so in the summertime we'd hang around, but when we get back to university, we'd hang out. And he told me, he's a huge news guy. He used to stay in all the time, and he'd come out partying with us, but he was never like the center of the party. We'd just kind of hang out. Always watched news, always told us about news. But a couple months into our first semester, so like it must have been like around November or something, he told us that he paid his entire 4-year university tuition
Off investing.
And of
No,
course,
how
does that not blow your mind? You know, especially when we're like, sneaking into these conferences just to like steal sandwiches.
He bought Bitcoin before it was Bitcoin.
He would have been the guy. He didn't, but he would have been that guy. But those people are like Bitcoin people are a little creepy though.
Yeah. Yeah.
So yeah, that blew my mind, and that's when I realized. I mean, you always hear like, cynically they say, "Don't work hard, work smart." But I truly believe you have to work hard and you have to work smart.
Absolutely.
Yeah.
Yeah. I mean, and just to kind of tailor that too, like in my experience, I would even go off to say this: you work hard when you're young.
Yeah.
Because you have the energy, and then because you're young, you can take more risk.
Yeah.
You have more time to recover. But especially past like your younger years, let's say 20, 25, even all the way up to 30, then that's when you have to consider working smart. So things have to be logical and more operational. But yeah, because I agree, you want to have both attributes.
Yeah.
You want to be able to work hard and work smart, do it at the same time. But then when it comes to leveraging, the working hard part is more crucial when you're young, and then the working smart part is when you're older. But yeah,
that's right. That is right.
Yeah, but what time we have, Dave? How long are we in?
We're pretty good.
Pretty good. Cool. Yeah, but that's our first trade experiences, and I guess just to lead in, we already explained what was it like. I know you asked one of that questions. I said before, for me, I came in with a lot of hesitation, so for the most part, I was expecting the worst, but I got better. I don't know if you said what was it like. You said a lot, but if you want to just kind of simplify that.
It's hard to say because it was a very fun time in my life. And university, I had a good time, a lot of partying, a lot of stuff.
Do you feel like because you lost it all, you didn't have your opportunity to blow it on hookers? I'm just kidding.
Of course, I was waiting to make the mad millions off my $300. That never happened. So after you begin to realize that the mad millions aren't going to come pouring in by the truckload.
Yeah.
I don't know. I guess in a small way. And at that time these online brokerages were kind of starting out. I kind of felt that like I was doing something. I don't know. I just felt a little more grown up.
Yeah.
Just still in college, university there. Even today, investing seems a mystery.
I'm glad you said that though, because I felt the same way when I got into investment. It's like a level of sophistication that you feel. It's weird.
It is, but I have to say now, as I think I've been trading for about 20 years now, over 15 years. It is a level of sophistication that I have felt when I did it, but now I just feel like we're just wearing dirty wigs because we don't want to shower. Level of sophistication, like it's like the Wizard of Oz. You pull back the curtain and then you see what's really going on.
Yeah.
You see things like recently, like the GameStop, which in a sense democratizes a lot of these things and removes it from being institutionalized.
Yeah, I mean it's gonna.
And that's a whole different topic.
It got its trade-offs. I mean, because at the end of the day, we're all talking about corporations and big business.
Yeah.
For us, we're like just petty traders. We're talking about a couple $100.
Oh,
but then
crumbs.
But we can agree that there's a level of game playing that's involved and knowing how to play the game effectively.
It is a game.
Yeah, and I have to be very, very, very like specific to that. I don't want to say this loosely. Because the stock market is not a game. I mean, it's a serious game. You can lose it all, but it's definitely a game where you can develop. It's a know-how, and if you play it right, you can definitely be successful. But then there's different levels to the game.
Yeah.
You can say we're probably even with the 5+ years we've invested, I would still consider myself like no more than level 5.
Yeah.
Same. Like you really can get at like level 1,000 with investments. So when you're at level 1,000, we're talking about making $200,000 a day,
Oh yeah.
Depending on the shitload of securities that you buy, right? And yeah, I mean it's I mean, the higher the risk, the greater the reward, but the more possibilities of just shit going wrong. Level of greed, sociopaths in the market, people just wanting it all.
Oh man, you see that at all levels.
That's true.
At the $200 level, $2,000, $20,000 level, $200,000, and $2 million level.
But it doesn't affect the entire market when it's more at the lower level. If it's low tiered, like for someone that's greedy for a couple $1,000, it's like, okay, you got lucky. It's fine.
Yeah.
But GameStop is a great example. Like we're talking about everyday people against a hedge fund. And obviously the hedge fund, they had millions and millions of dollars. And we saw some of the complications and the backlash, the shit that Robinhood did. And I think TD Ameritrade, when they halted people from being able to buy more shares.
Yeah.
So it's like they're combating these hedge funds, which is already lawfully protected because they're in the institution. And then they have the money to lose. But if you just some Joe Schmo that's riding in that trend and you buy, and it's like, well, dang, like I'm kind of just in gridlock because of things that's going on. That's to me, that's just a more cynical level of negative stuff being played out. So like, I totally agree with you. Like,
yeah, interesting.
Yeah, when you dive deeper into it, you realize it's not as sophisticated. It's not as sophisticated as when you first walk into it. I agree.
It's like that gold toilet doesn't get cleaned that often.
Right. Or if it gets cleaned at all.
Yeah.
You get that gold toilet, you piss on the side of the rim.
Yeah,
way too many times.
There's still a little bit of crap on that gold toilet. Just kind of lose a bit of luster. Interesting.
Yeah. So you already said, I think the next part was how was the outcome? You already said your outcome, so you end up losing it all, right?
Yeah, the company went bankrupt. So that was...
So how was that experience like? Did you have to go through any lawsuits? Did you just kind of take your losses? Did you get the reported at least?
Yeah,
what did you do after?
At that point, I was already, I'd learned that the company went bankrupt. I guess I wasn't too surprised. Once again, that's hype. And then I just kept on trading different stocks. I went beyond and learned more.
Yeah.
Tried to, in the end, I lost my money, but I love talking about this, because everyone tells me, oh yeah, what's a good way to start, and everyone loves a success story.
Yeah.
But I always tell people the first investment I ever made ended up in bankruptcy.
Yeah.
And I think that was a really good lesson for me. Yeah.
That's beautiful.
Just kind of pull the Band-Aid off right away, just right at the beginning, even before the cut.
Yeah. I mean, and that's something, that's a really good tip or advice we can give to the listeners is that, you learn from your mistakes in the market. And it's very much so expected too. Like, I feel like if you go into the investment and you're doing well the entire time, and there's not a lesson to be learned, then in my opinion, you're doing something wrong or you're doing something fraudulent.
Yeah. I mean, I'm sure there's
nobody is 100% successful in the market, dude.
Maybe someone's lucky. I doubt that, but I start listening to people when I hear their kind of horror stories.
Yeah.
There's some real legitimacy. There's some real passion or feeling pain when people talk about that, and
Mm-hmm.
and of course they explain it to you in like 10 seconds, but it probably lasted them for like months, days, weeks, even years.
Yeah.
So.
Yeah, well, my outcome, I didn't have any losses. Of course, I had that bump in the road with PayPal, but just from that experience, I just continued to buy more, did more research. I did focus on blue chip stocks.
Yeah.
I'm sorry, stocks.
Mm-hmm.
After a while, I don't know what other stocks that I bought. I think I bought a little bit of Nike.
Okay.
I bought Twitter. Well, no, Twitter wasn't even available at the time. Twitter didn't come till after.
Mm-hmm.
I think I even had Facebook at some point. But Facebook was already high value around the time I bought PayPal. They were already like 100 plus. But yeah, I just focused on blue chip, and then I got to mutual funds.
Oh, okay.
And I did
then
mutual
to
funds.
Mutual funds.
What's
okay.
up?
And you went from stocks to mutual funds.
Yeah. I went to mutual funds because again, I just trying to like experiment and balance things out, have a better understanding into the investment. Oh, I should say this too. I forgot because I did mention that my first account was an IRA.
Yeah.
So yeah, this is an important point that I should make, or rather a funny story. So yeah, when I made all this money, then of course, naturally, I'm like, I want access to this money. But then that's when I learned like, oh, wait, I can't touch this money till I'm 65.
Yeah.
So I'm like, okay, wait a minute. Like I've made this trade. I've done my money in this. I got this return. So I'm hoping I can like use this money and get some hookers. And I'm joking.
Yeah.
I'm kidding.
I got you.
But no, I can take this money and do something with it. And I'm like, wait, fuck, I can't touch it till I'm 65.
Yeah.
So, so I end up doing more research, asking questions, calling TD Ameritrade, like, hey, you know, what accounts can I do where I can like still invest and have the cash on hand? And then that's when I learned about an individual brokerage account.
Yeah.
So so for anyone that's new to investment, that's want to get into investment and they're wondering what type of account to open, you always want to start off with a individual brokerage account that allows you to just buy, sell, and trade, you know, shares, stocks. You can do bonds, mutual funds, annuities, a plethora of things. And then basically, you make your money from whatever your gains. But once you take it out the account, you have to keep in mind that you have to pay tax on that. That's a capital gain. But besides that, you always have full access to the money, opposed to having other accounts such as an IRA or 401k. But so
that's good advice.
After that, I opened up an individual brokerage account, and then I had to take new money because you can't transfer out the IRA because you'll get penalized.
Yeah.
But just put some new money in there, and then that's when I wanted to vamp up a portfolio. At this point, I'm thinking about diversification, and then now I have more of a long-term approach. So now I'm looking for some really, really good, suitable blue chip stocks, mutual funds, and at that point, I just kind of wanted to ride and see how much money I can make long-term. And then in that process, because I didn't really focus on just making money. Again, I was really, really hesitant. I was still afraid of losing money. So I wasn't really going super aggressive. So I was fine with long term, but that allowed me to get more familiar with volatility and how it works and just seeing how, how the market rides. You know, you have some periods where it's like, damn, it's low and it's low for a while. You start to get that feeling of hopelessness. Like, man, will I make my return? Will I make my money back? And then you can wake up and have this fantastic week where it just shoots to the moon. And you're like, wow.
Jeez, man. I know how farmers feel in famines, you know. No, there's nothing compared to what they feel, but yeah.
But yeah, man. But yeah, I think this is a good start for episode 1. I hope everyone enjoyed this. Anything you want to add, Dave?
No, nothing right now. I'm really excited for this this podcast as well.
Yeah. No, I think, man, we already have a shit ton of ideas. We just did this episode again just to appeal to the listeners, kind of give an introduction to who we are and how we got into the market. But no, we're definitely going to dive deep into like some real, issues within the stock market, like just real time events. We're going to make it interesting, fun. And then I'm really looking forward to if we can have like guests on the show. So it's going to be dope, dude.
Elon Musk next week, folks. Stay tuned.
I wish, but please, if it happens, oh my God, I'll lose my mind. So Elon Musk, if you so happen to listen to this,
bring some pizza,
the first episode,
some beers, roll some joints.
But yeah, man, other than that, please tune in. We're going to have some more content. I don't know. We have a set date. This is the first episode, but
let's see where it goes from here.
We're going to see where it goes from here. Yeah. And then from there, we're going to have more structure, regulation. And then hopefully you guys going to just keep listening and listening on.
Yes. We appreciate all our listeners out there.
Absolutely. And the most important part, just some of the gems that we dropped and some of the education. I hope it was beneficial. Mm-hmm. But again, we're going to replay the disclaimer in the end. We're not professionals. We're not certified. So just make sure to do your research.
Two ordinary folks, just like everyone else.
Exactly.
With their own flaws.
Realize you invest at your own risk. But other than that, this is the Hustle, the Struggle Investment Podcast. I'm glad that you guys listened in, and I hope you all enjoy. And that's it. This is Herb and my main man.
Yeah, this is Dave.
And I hope you guys enjoy. Stay tuned for the next one.
Stay tuned.
Peace. Thank you, everyone who's here listening. For a disclaimer, we are not professionals nor certified stockbrokers. We do sell, buy, and trade stocks, but at our own discretion. The content that we talk about is based on our own opinion, not fact, and the content is for entertainment purposes only. Remember, what you invest is at your own risk. If you know nothing about stock investing, we highly suggest you seek professional help.